You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back. It is Thursday. It is 1:30 p.m. Central. It is 2:30 p.m. Eastern. Do you know what's going on in the futures options markets? Well, let's find out together. Yes, it is time for TWIFO. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, at least we tend to think so, Options Insider Radio Network. Remember, where can you go to get exclusive access to our pro podcast feeds? All of our great shows we do going up on that podcast feed. You can access it at your leisure on any platform under the sun. Of course, you get exclusive access to 2 additional shows. You get pro Q&As on, as well as options oddities at the end of the week, as well as, of course, live access to everything else we do here on the network. Giveaways. We're about to give away the Pro Trading Crate for all you pro members out there in September. So a lot of great goodies going to be piling into that. So where do you get access to all that? Get your name in the hat for the next giveaway. Theoptionsinsider.com/pro is the place to go to join us on that journey to the dark side. And who's joining us on today's journey into futures options goodness? Joining us, holding down the CME Group and FTSE Russell hot seats this week, our old friend, Dan the Man Gramza, a.k.a. the president over there at Gramza Capital Management. Dan, welcome back to TWIFO, sir. It has been too long.
Well, thank you very much, Mark. I'm looking forward to exploring these markets with you today. We have a lot to talk about.
We do have a lot to talk about, so let's get to it. It is time for the Movers and Shakers Report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers Report, the portion of the show we break down everything that's lighting it up to the light side, a.k.a. the upside, and to the dark side over there at CME this week. You can check out this report for yourselves over there. You follow CME on Twitter. If you follow us, we tweet it out right before showtime as well. If you do that, you would see that it's roughly, I wouldn't even say 2/3, getting close to it on the green, and then the rest red. So we're hanging out in a pretty even zone right now, especially considering what we've seen on the show the last couple of months. There have been many days where we can't even do a bottom or top five because the markets are all in one direction. This week, not so much. We can easily do bottom probably 15 or 20 and the top quite a few. So there's enough to choose from in both directions. Speaking of choosing, Dan, it is now that time, sir. Where should we begin our journey this week? To the light side or to the dark side?
I favor that light side. Let's start with that.
You are a light side fellow, a green lightsaber for you, sir. So to the light side we go. Number 5, you guys can probably guess there's going to be some energy in our light side this week. And number 5 is WTI, up 8.64% since our show last week. You can thank our good friends at OPEC for all that fun up there. Number 4, off to the metals. It's silver. Haven't checked in on silver in a while. Maybe we'll head out there this week. That's up 9.53%. Number 3, it's lumber. One of our frequent offenders this week, up 10% exactly. Very rare that we see that out there. If you're wondering, it was number 4 in the other direction last week, off 5.95%. And if you're wondering, I wish I could talk about lumber on the show. The lumber options don't really do much paper. I think the CME has heard you because we may have some developments to report on that front. We'll get to that maybe a little bit later in the show. Number 2, back to energy. It is RBOB, up nearly 12% this week, 11.91%. It was number 4 in the same direction last week, up a paltry 1.32%. And the number 1 mover and shaker to the light side this week is heating oil, up 13.41%. Remember, all these numbers are going back to the end of our show last week. So it's a full 7-day palooza. It's not just from Monday show. Monday is, of course, what our This Week In reports show you over there at CME Group. So a little bit of a different frame of reference there. It's a hot week when the Russell 2000 is up over 4, about 4.4%, and it can't even break into the top 5. That shows how much action there is and how big the movers are to the light side this week. To the dark side now we go. Number 5, we go out to the Ultra 30-year, off 1.92%. Number 4, it is rough rice. Once again, popping up on our radar this week, off 2.36%. It was number 5 in the other direction last week, up a whopping 0.09%. That shows how difficult it was to make a top 5 last week, listeners. The number 5 spot was 0.09%. So there was not much to pick from on the upside last week. Number 3, back to SOFR, the 3-month SOFR, off 2.39%. It was number 1 in the other direction last week, up 3.78%. Number 2, out to the beans, soybean meal, off 2.82%. And the number 1 dark side mover this week is soybeans, off 3.86%. But you know what? We had heating oil number 1, up 13.4%. We have RBOB number 2, up 11.9%. We have WTI number 5, up 8.64%. And it seems like OPEC and all the madness therein is on top of everybody's mind. So let's go out to energy first.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, everybody, welcome to the energy segment. You guys can follow along with these reports live, or you can do it after the fact as well. These reports are running 24/7 for you folks over there. CMEgroup.com/TWIFO, TWIFO is the place you need to go to generate these reports for yourselves. Then you're going to go into that asset class drop down. You're going to drop 3 into energy, then pop over. I wish we could do heating oil and RBOB, but we've talked about them on the show before. They don't really do a ton of options paper. So instead, we have to focus on the big dog this week, which is WTI. Dan, I'm not sure if you heard, but our friends over there at OPEC decided, things are too cheap. We need to juice things up a little bit. Have you heard that news, sir? It hasn't really made the rounds yet.
Yes, it has. It has. Not too surprising. Excuse me. When you think about where their likes are, most of OPEC and OPEC Plus want that crude around $90 a barrel. Saudi would like it near 100. At 100, they can balance their budget. And it really started, I believe, back in the Arab Spring. Remember that a few years ago? Well, at that time, if you look at Saudi Arabia, they pumped billions of dollars. They spent billions of dollars because they didn't want an Arab Spring type situation in their country. But if they had crude around $100 a barrel, that balances what they spent. They're a unique country in that it's only cost them $2 a barrel to get it out of the ground. So what we're approaching when we think about that aspect, and let's think about OPEC Plus. They have an influence about 45% of the global supply of crude oil. So they are somebody to listen to. The thing that's always been interesting about them in the past is they all get together and they look at each other and say, okay, we're not going to do, or we are going to do cut back. Let's say we're going to cut back. Everybody goes home and they do exactly what they wanted to do anyways. Maybe because of economic pressures, or they're just not following what was agreed to. I've always felt in the past that there were moments of weakness in the cartel. Over the last couple of years, they've been fairly cohesive. So what they say, they do. And I think that's the result of what we're seeing here now. What I do find interesting is as prices are going higher, as WTI moves up, after today, it's got some big challenges ahead. So I think what you and I want to pay attention to is what happens around 90 and a quarter if we get near that range. In the past, between 88 and 90 and a quarter, they've sold that range. If you go back just a few weeks ago, every time we were up at that range, they've sold it, which implies hedging. And we backed off from that. Now we're approaching those levels again. So I think that's the big challenge. And if buyers are really here, and this is going to firm up, that means by the close of Friday, we want to be closing above that 90 and a quarter. So how do people want to go home at the end of this week when it comes to crude? Do we have a solid positive close, so they're willing to hold on to positions as we go into the weekend? Or do we move up tomorrow and then back off at the end of the day? Leave that shadow, for example, on a candle chart that you see at the highs, which implies that people, or I should say buyers, weren't that confident going into the weekend. Right now, momentum's up. I think we need to be cautious here on the long side. And I also think we're approaching fair value for crude oil.
Let's see what kind of values we're seeing out there right now. Crude coming into the start of this segment, listeners, 88.5, up 9 handles just since the start of this week, or 11.3%. Of course, if we go back to the end of last week's show, we were a little higher. It's only up 8.64% from the end of last week's show. In terms of action, how much paper is going up out there on an OPEC week? It's a pretty active week, 605,000 contracts on the tape, listeners. Nothing to sneeze at. And of that action, this was an equity. It would all be in the contract going out tomorrow. But actually, this is crude oil, a little bit of a different beast, a little bit different rules of engagement. 31.5% are going up in the June contract, next year's June contract. That's always interesting to see out there. In terms of action, where is that June future? It's at 81.17. So we're looking a little bit lower out there, the listeners. And what is the vol in that June contract? It is a 52, off about 1.5 points. Of course, that's understandable. The vol is off pretty much across the board. That near dated contract, some of them, the one going out in 8 days, the vol is off 7 points. So this is like any earnings announcement for an equity or anything else you might be used to, any type of event risk. Once the event has happened, you're going to see the vol come popping out. And that's pretty much what we're seeing here throughout most of this term structure here in WTI. In terms of skew, Big evolution on the calls, not as much on the puts. Last week, the puts were 9.2% bid out here in this June contract. This week, they're 9% bid, so not a huge change there. Call-wise, last week, the calls 5.2% cheap. This week, 1.9% cheap. So the calls, not quite as cheap. The puts hanging out at about the same level. And in terms of action, the big dog out here this week, listeners, by a country mile, almost 100,000 of these, 92,765 of the June 120s. Those are the big dog, including a boatload today, 69,000 trading today, 23,000 trading yesterday, and the rest kind of inconsequential throughout the week. Opening yesterday, obviously we don't know about today's paper. Oh, you know what's going on, Dan? Another one of these things. I thought we had seen the last of these, but apparently they are back, because this is also why we're seeing so much paper in WTI. Not just because of the OPEC number, but also because of these ridiculous verticals. It's the 120, 121 June verticals going up this week, listeners. Went up 23,000 times yesterday. Went up, looks like, on a little bit of a ratio today. 69,000 of the 120s traded today versus 47,000 of the 121. So a total of 92,000 of the 120s have traded this week and 71,000 of the 121s. Dan, we've seen this go up before, and for ridiculous size, we've had some people speculate, they're trying to get the half strike. I mean, why else would you do a weird spread like this so tight? Then some people thought doing the stupid to try to get kind of that half strike in between. But it looks like this is actually a vertical. They're buying one and selling the other. So what are your thoughts as to why someone would put up, 160,000 contracts in a 1 point wide vertical, Dan? Educate our masses.
Well, I don't know about educating, but I'll share my thoughts. And that is, one, it says something about the point of view someone has going forward. And we're looking at contracts for next year, right? Wasn't it 23 that you said?
Yes, June of 2023. Yes.
So it says something about that longer term view. I think first, what does it reflect in terms of attitude? But is it realistic? It's possible to get back up above 100. We still have this Ukrainian situation, which has had all kinds of impact on a variety of different markets, including energy. And are they contemplating something else that may be happening in the future? That could be a part of that attitude. But I find it really interesting, the size we're seeing at that level. I guess personally, I'm not that optimistic. And it wouldn't interest me with the spread at those levels. I just don't see the fundamental side behind it right now driving that. And that may be, if you feel that this optimistic point of view is there, well, then maybe this is the time to put it on when people feel that it's not there. So it's not too rich in terms of cost. But I don't know. I have my doubts about that one.
Yeah, I think we all do. It's a very weird trade. Let's go back to some more realistic paper as opposed to this June paper that is kind of skewing the numbers a little bit. Let's go out to Dees of this year. Outside of that weird vertical, listeners, the biggest trade of the week are the par calls, the 100 calls going up in December about 18,000 times this week. And this has been trading actively pretty much all week. 6,700 today, 6,000 on Tuesday, 5,700 on Wednesday. A back and forth opening to closing throughout the week. This par strike has been a very psychologically important level for a while. Folks have been watching this. Are we going to hit it again? Are we going to break through it? So not surprising that we would see a fair amount of action out there on that strike. And then right behind it, we have, looks like the 90 calls. So the kind of scattered paper this week, which is interesting. The 90 calls out here in November, taking the number 2 spot outside of that ridiculous vertical, listeners, doing about 15,000 contracts. Again, trading pretty actively all week. The big day was Monday, about 4,800 on Monday, 3,900 today, 3,000 on Wednesday, and almost 3,000 on Tuesday. And again, back and forth opening to closing on the 90s throughout the week as well. So a little bit more sensible paper there. 90 calls, the par calls. I kind of expected that. The ridiculous 120, 121 vertical with 160,000 contracts. I thought we had moved on past that, but alas, that is not the case. Dan, anything else catching your eye out here in energy? You want to move on to another complex, sir?
Well, we want to remember, I think at 100, that activity does make sense. we were just there in August. So that's not a stretch. That's something that could easily happen. When we were at that level, if we think about behavior that we saw then, that was around 95 to 105 was kind of the fair value at that moment. So if we do get up there, then I think we're looking at maybe a $5 up and $5 down kind of range. So 105 to 95 if we kiss that 100 again. So it's a very interesting level. The dynamics that are at play here. And one more thing I think we should throw in here when it comes to crude. And as you said, it's not just OPEC. There's a lot of other variables here, or the war in Ukraine. It's the U.S. dollar. Since crude oil is priced in U.S. dollars, if I'm a producer, I get paid in U.S. dollars. And when I go to my bank to take those U.S. dollars and get my currency, I sell them U.S. dollars, I get my currency. Well, the stronger the U.S. dollar is, I get more of my currency. And the U.S. dollar is strong. And that means it puts some downward pressure, in a sense, on crude oil prices. If we have a weaker U.S. dollar, if that changes, that has a tendency to push crude oil prices up. Because if I'm that producer of crude oil, I can offset that weaker dollar when I go to exchange my money by having a higher price for crude oil. So I just think that's another variable that we want to keep in mind when we look at crude oil. We also need to look at that U.S. dollar.
There we go. Good stuff, listeners. You guys been paying attention to all things energy out there. I'm sure you have. It's kind of hard to avoid it these days as we keep on rolling, listeners, out of energy and into the ags.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, everybody, welcome to the world of ags. I want to hit on this for a couple of reasons. First off, to our dark side, our number 4 is rough rice. We don't have to go out there. We know the deal with rough rice, listeners, from an options perspective. Number 2 is soybean meal, putting up nearly 40,000 contracts out here this week, and that's off 2.82%. And then the beans themselves putting up about 200,000 contracts this week, number 1 off 3.86%. Before we get to that, though, Dan, we also had this week lumber to the upside up 10%. And you might say, well, what's the big deal? We can't really talk about lumber. And yes, that is true. It's doing about 3 contracts so far this week. But CME has heard this show. They've listened to you folks out there, and they put out an interesting tweet earlier this week saying they're looking at new smaller size lumber futures and options, trying to provide more flexibility out there. They're going to have those. They should be available soon out here. And again, this is obviously a nod to the fact that lumber has been one of, if not the most volatile assets on the planet since the onset of the pandemic. Forget Bitcoin, forget nat gas, forget equities, dead trees have moved more than all of them. And yet we don't really have a deep and liquid options market on it. That's a shame. I know a lot of people listening to this show have written in saying, man, I wish I could sink my teeth into some options on lumber, but there's nothing. You can't do anything. So they hear that they're making new, smaller size contracts. We should have them getting up. Actually, they're live now. So you can, if you are intrigued, maybe this is it, Dan. Maybe this is the inflection point we've been waiting for, because it's not underlying movement. It's not vol that's been the problem with lumber. It's had that in spades for years. What's been missing is something else behind the scenes. So what do you think, Dan? I think maybe these new smaller size contracts are going to finally get lumber onto people's radar from an options perspective, sir?
I do, because of what you just said. That smaller size makes it compatible for a lot of people's accounts. Their margin requirement goes down. It makes it more palatable in terms of trading futures. So I think that is going to be helpful. And the options are definitely a way to participate. It's something that also, it does fascinate me. And this upward movement that we're seeing right now, if you and I wanted to take advantage of it, maybe these options are something to look at. The thing about it, Mark, is it's not just for today. if we think about what the path of destruction that we've seen in Florida, unfortunately, with Ian, that hurricane has created a big hole that needs to be rebuilt when it comes to structures in that part of our country. And most lumber that we look at, that we process here in our country, is the northeast and northwest part of our country. That's where our lumber comes from. And there's about 4 different grades that come from those areas. So I think there's definitely a demand on the way when it comes to this. If you look at it from a fundamental point of view, and these new options, that may just be the way to participate as that demand comes into the market.
Right now, lumber options have done a whopping 36 contracts. It's actually a pretty robust week for lumber, Dan. So it's nothing
yeah,
to sneeze
that's a
at.
good point.
454 is where lumber is right now, 454.8. And it's the 400 puts that are leading the dance out there in lumber in November out there. If you are intrigued, listeners, let's head on out into some ags that are actually trading options right now. And the beans are a pretty active spot. Mr. Dan, what's catching your eye out there in the wonderful world of soybeans this week, sir?
Well, it's a mystery. That's what I would say. Its price action does surprise me. I think there's more room to the top. If you look at how soybeans have traded, since about the middle of June, we've been trading between $15 and around $13.60, $13.50 on the downside. It's been a sideways move. Got a little cheaper in July, latter part of July, but it's basically been a sideways market. And what fascinates me with it is that I think that demand fundamentally is still out there. The demand is there, fundamentals are there, but price isn't. And as you know, Mark, from a trading point of view, price to me is that last deciding factor. I look at fundamentals. I want to understand what possibly may be driving a market. But the final determining of what we're going to do and how we're going to do it is price. And right now, price for soybeans is at the lower edge of this sideways move. I still, as I said, I still think there's more room to the upside. What we're seeing here kind of reminds me of the meat market, especially 20 years ago or so. In other words, the sideways move that you see here, when I look at candles, what I call behavioral candles, you see shadows at the highs, you see shadows at the low. So to me, it means they're selling the rallies, they're buying the breaks. That's what we've seen. And it's been fairly consistent, again, going back to about the middle of July. So right now, we are at levels that we found buyers before. We don't see them in any dramatic way today. But if we can get above 1385, the next major objective would be 14 and a quarter to 1450. So it has some work to do. I'd be cautious on the short side. And right now, it looks like they're ready at this level. These levels, we would look for them to start buying the break when it comes to soybeans. It just hasn't behaved the way I thought it would this year. And, price, as I said, dictates what we do.
I think we can say that about most asset classes this year, Dan. They haven't behaved the way I don't think anyone has predicted. Fixed income, equities, metals, pick your poison, Dan. None of them are doing what they're supposed to be doing, right?
Yeah, exactly. The fundamentals and the price action don't necessarily mesh in some of these markets. And beans is a good example of that. So I just, like I say, I'd be cautious on the short side. There may be some buying opportunities here, but if indeed you see that coming in, it's got to follow through. So I mentioned that 1385. If you don't get above 14 and a quarter within 5 days, I give that the big adios because they're probably going to continue sideways.
The big adios. We missed that, sir, on the show. The big adios.
That's right. I forgot about that.
We like that here. The big adios for beans. Let's see what folks are giving. Are they giving the big adios to beans? Let's find out. Nearly 200,000 contracts on the tape this week, listeners. So nothing to sneeze at. Beans at about 1360, as Dan was saying, in that front contract off nearly 5 handles, or about 1/3% just on the week. Of course, if we rewind back to last week's show, we're off nearly 4% out there. Of that 200,000 contracts, 60% going up in the November contract. That looks like about pretty near dated here. There's only about 15 days left here in this contract. Vol, what is the vol in the beans right now? About 23.5, actually down about 2 points on the week. In terms of skew last week, the puts, folks wanted the puts. 3.7% rich were the puts this week. 0.7%. So the puts have come in about 3 points. The calls last week, 5.1% bid. So we had pretty decent bid to both wings last week. This week, the calls 0.5% cheap. So the calls have come all the way into pretty much flat, as have the puts. So the bid in the wings has just collapsed over the course of the past week, which is kind of interesting. And in terms of the most active contract out here, again, I said about 200,000 contracts on the tape in the beans. It looks like it was the 1,400 calls. So again, kind of talking about those psychologically important levels. We're at about a 1,360 right now. 1,400, clearly a big psychological level, and 14,224 contracts going up at that level this week. The big day was Wednesday. 5,400 contracts on Wednesday, slightly closing then. About 4,800 on Monday, slightly opening. 2,200 today, 1,600 on Tuesday, also slightly opening on Tuesday. So it looks like opening earlier in the week, maybe giving up the ghost a little bit later on in the week. Right behind it, we have the 1,500 calls. So 1,400, not optimistic enough for your blood, listeners. Allow me to present the 1,500 calls, going up almost 10,000 times this week. The big day, also Wednesday, 4,200 on Wednesday, slightly opening then. 3,600 on Monday, slightly closing, and the rest kind of scattered throughout the week. So those are the two big prints. I'm looking to see if anything else really rivals the 1,400 and 1,500 calls. Looks like that's pretty much it. Almost 25,000 contracts, about 24,000 going up in those two combined trades. There are some puts to be found, but they're distant number 3, listeners. Almost 5,000 of the 1,360 puts went up this week. There was kind of trading pretty evenly throughout the week. 1,600 today, 1,300 Tuesday and Wednesday, and about 700 on Monday. Again, opening in the earlier portion of the week and closing looks like in the latter portions of the week, as those wings have kind of collapsed out there, listeners. So intriguing stuff. I'm looking for any other interesting and or aberrant prints. How about the 2000s? Actually, here we go. 2,000 calls in May of next year, listeners. So it's a pretty optimistic little look here. Looks like they traded 4,800 times this week, 300 times today, 4,505 times on Monday. Looks like they were closing. Looks like they might have been part of a roll, actually, because like they were closing on the 2000s, and then the 1700s also went up 4,600 times. So maybe rolling down to the 1700s. Actually, looks like a big strip went up. We have the 1700s, 1800s, 1900s, and the 2000s all trading 4,500 times. Maybe it looks like the 1800s and 2000s were closing, and the 1900s and 1700s were opening. So maybe taking a 1800, 2000 vertical off and rolling it down to the 1700, 1900. That could certainly be the case. Either way, that's why we're seeing so much paper going up out there in this contract as well. So intriguing stuff. May of next year for the beans. 2000, a little bit too rich. Sounds like it might have been a little bit too rich for somebody because they were adjusting down to maybe the 1700, 1900. Either way, intriguing stuff here afoot as we keep on rolling. It's that time, Dan. It's time to talk about some equities.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody. Welcome to the wonderful world of equities. Head into that drop down, pop out of ags, go down about 3 slots to equity indexes. And then we're going to go over and hang out in Russell 2000 first. But before we even do that, listeners, let's set the table from a vol perspective. Coming into the start of the segment, RVX, so the VIX of the Russell 2000, a little bit north of 35, about a 35.15. It's down about 2 3/4 points from where it was this time last week. VIX itself at about 29.5 when we kicked off the show, down about 3 1/3 points from this time last week. The VVIX, the vol of vol, a little bit shy of 95. That puts it down about 15 points from where it was this time last week. So volatility itself was looking pretty volatile last week. It has come in. It's still pretty juicy at about a 95, but coming in about 15 points on the week. Vol Q, so the at-the-money vol of the NASDAQ 100 at about a 33.20. That's down about 3.3 points from last year. That puts that VIX to RVX, so the large cap to small cap vol spread, at about 5.6 points. So getting a little bit wider. Obviously, VIX dropping more than RVX did this week. So that's where that a little bit wider spread is coming from. And the VIX to vol Q at about a 360. That's literally unched from this time last week. So NASDAQ to S&P vol spread hanging out at about the same level this week. Mr. Dan, a lot of turbulence going on out there in the world of equities these days. We saw a lot of sell-offs coming into this week. Then we saw two very aggressive rallies pretty much back to back. Once we dipped below that 3,600 level in S&P, it seems like the bulls were out in force. A little bit more mixed action going on out there in subsequent sessions. And once again, we're selling off a little bit again today, off about a little over 1% in most of the major indices out there. So a lot to unpack out there, Mr. Dan. What's been lighting up your tape in the completely topsy-turvy world of equities these days?
Well, I think they're incredibly interesting. And you mentioned Russell. If we start with our friend, Mr. Russell, what's interesting about that small to mid-cap index is it can have a tendency to lead the other indices because those small to mid-cap companies can be a little more aggressive in terms of responding to changes than a very large monolithic company. So I like paying attention to that one, but it's very similar to the behavior we've seen in other markets. And I think we saw a glimmer of optimism coming in, but there's this skittishness is the only thing I can think of, or a uncertainty in the marketplace. And this part I don't totally understand, and it's regarding the Fed. They look at numbers and say, well, maybe the Fed's going to back off a bit. Well, the Fed's been very firm and consistent that they need to tackle inflation, and they believe that the tool they're going to use is increasing interest rates. They have other things they can do. They can buy and sell securities. They can change reserve rates at the banks. So by changing the reserve rate, that increases or decreases money available. That's what all these tools do. If you think about it from the point of view, there's a pool of dollars out there in all kinds of accounts, but there is a fixed number. And the Fed, their monetary policy basically increases or decreases that amount of money available. And so people are thinking, well, geez, we're concerned about inflation, but we're concerned about a recession. Are we in a recession? Is it going to get worse? What's going on that front? Maybe the Fed shouldn't move too quickly. Well, there's a lot of good reasons to be concerned about that, the Fed included. Nobody knows what the magic number is. If you remember the late 90s, we had the dot-com bubble. Well, if you look at what the Fed did there, they increased interest rates throughout the late 90s to 6.5%. That became the magic number. And at 6.5%, credit choked down that dot-com industry, and we saw the market breaking. And it went down to 1% in March of 2003. Now, then what happened? Well, the Fed started saying, well, we're concerned about inflation because that is one of their jobs. Monitor inflation, full employment, price stability. That's their mandates. So they're always talking about it because they got to be concerned about it. So we had now from 2003, it's creeping up. They're increasing interest rates because they're afraid of inflation at 5.5%. We had the real estate issue, the subprime mortgages started collapsing. That number, nobody knows it's going to be that number, but at that number, it was enough to choke up that credit in the market to the point that it caused that change. Now, let's go to where we are right now. What is the magic number? We don't know. Fed really doesn't know. And people are skittish. They are concerned. So for every step forward, people say, geez, if the Fed continues, is it going to get worse? I mean, what does it look like for us going forward? Are we going to stay in this downtrend for the rest of the year? Are things going to get a lot worse? We don't know. And that uncertainty is, I think, is what we're seeing reflected in these prices. You mentioned this week. Well, we had a very interesting start to this week. And if we look at our friend, again, Mr. Russell, we need to be above 1,800. That would be the next objective, I think, from a price point of view. We'd want to see that by the middle of next week. If you're on the long side, we need to start moving. Right now, the way we're finishing, if we finish today out in this structure, it implies a sideways move for Friday going into the weekend. But we also have some numbers the market's going to be looking at as well coming out Friday. And does that tip this one way or the other? So I think Fridays are fascinating because they do tell us something about the attitude of people going into the weekend. So if we see a weak close tomorrow, it implies that buyers aren't willing to hold on to positions, but sellers are. If, on the other hand, we see a close for tomorrow above 1780, 85, well, then it says people may be willing to hold and go home long going into the weekend, which is a sign of confidence. So it's fascinating where we are in these indices. And I know a lot of people feel right now the sky is falling. But you want to remember, we were right at these price levels back in July. So yes, the market has come off, but we're not in terrible shape. You know, I think people sometimes forget that when you hear the market's down 1%, but look where we're trading. You know, we don't have the Dow at 1,000 anymore. So we're much higher. The numbers are much bigger in these indices. So when you hear a 0.5% correction, I think it's important to keep it in perspective with regard to the overall environment for that index. So it's interesting structure-wise. I do believe the bias for the Russell, for example, and the other indices is for a move to the upside. The issue is it going to be sustainable?
Well, let's check out what's going on out there in the land of Russell 2000. Pretty active week, closing on 20,000 contracts already out there in the old Russell 2000. So folks are diving into this action. Right now, it's up. Like we said, it almost made our movers and shakers this week. It was just outside of them at number 9, still up 4.42%. So an explosive week for small caps. 1754 is where they are coming into the start of today's segment, up 84, almost 85 handles from Monday sessions, just 5.1% just since Monday. So a big banger week for small caps. We've been talking about a lot about even our other shows, like the option block that aren't futures options oriented, by products like IWM that are small cap oriented, closing in on 1 million contracts ADV out there as well. So folks are playing in the small caps right now. In terms of the action, looks like about 26%, so a little over a quarter going up out here in the October contract that has 15 days to go. So we can hang out there. It's right at our frame of reference, listeners. Let's see. In terms of vol, what is small cap vol right now? It's at about a 34 right here in this October contract. That's down about 1.3 points, and it's close to what we were talking about with RVX. RVX was just at about a 35 and change, so that lines up pretty closely. Remember, RVX is that VIX methodology. So you're talking 30 days, you're talking skews, a bunch of things baked into that number. It's not just straight at the money vol like we're looking at here. In terms of skew, last week the puts 8.4% cheap. This week, 8.8% cheap. And the calls, 7% rich. It's going to be 7% cheap last week. Rich, that would be interesting. 7% cheap last week. This week, 8.6% cheap. So the puts getting a little bit juicier and the calls getting a little bit cheaper out there. And in terms of action, it was the 1860 call. So an intriguing strike. Again, not the one I would have guessed off the top. But hey, that's why we run the numbers, right? 1860 calls, doing nearly 1,000 contracts this week, followed hot on their heels by the 880s. Looks like there was an 1860, 1880 vertical that went up for size on Monday about 800 times out there, opening on both. So it looks like paper coming in and opening on that 1860, 1880 vertical out here in October, listeners. So that's kind of interesting out there. This is actually looks like the week 3 October contract. So that's interesting. Not just straight up upside call action, but a little bit of a 20-point wide vertical. It's like it traded a little bit more the rest of the week, but the big day was Monday. What do you think about that, listeners? 1860, 1880, like that. We're at it close to a 1760 right now. So you need a fairly aggressive pop if you are buying that. If you're selling that, well, then you're fading a little bit of that upside action out there. Given the skew setups, probably looking like they're probably buying this, but we'll see. Also, we saw 1920s and 1940s trading on Monday as well, almost 400 times. So those were closing. So maybe they were closing the 1920, 1940 vertical and rolling down to the 1860, 1880. If they were doing that, they're doing roughly 2x on the second leg. So that's usually a sign of what we like to call on the network, listeners, a bit of a house money roll. They made some money on that, in which case, then they were probably selling that vertical. So intriguing stuff. Doing 2x on the lower leg, always kind of interesting. Let's see what else was lighting it up out here in small caps this week. Beyond those kind of two verticals, that was a good chunk of the paper out here. Also 1850s going out in about 8 days. They were trading pretty actively this week. 100 on Tuesday, 100 again on Wednesday, and the rest kind of scattered throughout the week. Opening looks like on both days, so a little bit of 18.5 action going up out there as well. So looks like it is mostly calls this week, and maybe some strikes you may not have considered, but a lot of call action nonetheless. Let's go a little bit farther out. Actually, you know what? There was another big print. This looks like this is the week 3 November contract, the 1600 puts, trading pretty actively out here as well, doing almost 600 contracts this week. Looks like, again, there was a 20-point wide vertical going up. So someone out here really loves 20-point wide verticals, because it was the same month that we were looking at. Oh, actually, you know what? Looks like they were maybe closing, because that 1920, 1940 that was closing. Looks like we also saw a 1920, 1940 vertical going up here in this contract as well, the week 3 October here. So yeah, this is a lot of interesting paper going up here. 1920, 1940 vertical. They were reopening here, doing that about 500 times, and also looking at the 1580, 1600 vertical. So going up about 500 times as well. So that could be a bit of a pretty wide iron condor, perhaps, as well. Intriguing stuff. Or it could just be two. They both went up on Wednesday as well. So it's definitely related paper. So there could be a bit of an iron condor going up out here in the Russell 2000. You like those strikes, listeners? 1600, 1580 on the put side, 1920, 1940 on these are the November. These are the week 3 November contracts. You got a little bit of time for that one. Intriguing. You don't see a lot of size iron condors going up, but that could very well be the case out here. Interesting stuff. And also, not to be outdone, also the 1620 puts in December. So a lot of action all over the place. Going up 1,000 times today, just out of the blue. So no other paper, no other spreads, nothing else with that, just the 1620 puts. Interesting. If it's like the S&P, listeners, then they're probably blasting away at those puts. Again, we're looking all the way out here in December. That future's at about, it's hanging out 1754. So got about 130 odd points in those. If you are selling that, drawing that line in the sand, do you like that line in the sand there at 1620? I'm curious. What are your thoughts out here? And a lot of diversity of paper out here in small caps this week, which is always fascinating to look at. But we're coming up against it here, Mr. Dan, so we got to keep on rolling. We had a little bit of a surprise hit on the metals this week, so maybe we'll take a quick sojourn out there next.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, listeners, let's get out to the metals. Go to that drop down, pop down into metals. We're going to go into precious. And we talked about gold a few times on the show recently, but silver bursting onto our radar this week, up 9.53% just since last week's show. Also putting up some numbers. Silver usually hangs out in the sub 20,000 range. Today, almost 45,000 contracts on the tape this week in silver. So nothing to sneeze at. Mr. Dan, what's catching your eye out there in the forgotten precious metal sometimes, which is silver? You know, this narrative, Dan, has been going on for a while that metals have underperformed, and they certainly have. Maybe silver making up for all of it this week, sir?
Well, you know, I have to say, when I think about precious metals, that's one that I think about in terms of leading the way. You know, just like we talked about the mid caps and the small caps and the Russell leading the market, I feel the same way here. Silver can have a tendency to do that. Underperform, yes, we have seen that. What's interesting about the precious metals, they're what I call excuse markets. It's not because so much of supply and demand. Well, silver, to an extent, there is some supply and demand fundamentals. I mean, there are industrial applications for both of them. But primarily, I feel they're driven by excuses. Excuses like high inflation. They want to buffer that, and they look at precious metals, theoretically. If we look at a very weak dollar, then you have a tendency to have order flow going towards gold and silver. Well, we don't have a weaker dollar right now. We do have inflation, but we're not seeing these markets respond as people expect. You know, what always comes to my mind, Mark, is if you remember when Saddam Hussein was visiting Kuwait, when he invaded that country, I think it was January of 91 that we started our attack. And at the beginning of a conflict like that, there's a lot of uncertainty. Well, gold traded sideways. It acted like a base metal, not a precious metal. And I think the expectations are so high for gold and silver, we're just not seeing those being met. Now, let's talk about silver. Silver really had a clean move just 3 days ago. It was, and I say clean because it was not only a large move, not only a big move. This is on Tuesday. No, it was on Monday, where it took off. What was important about it is that it closed above the previous highs that we had around 1995. It closed right above those. It took them out, and it did it in a clean way. It's a strong, confident close. If we closed near 1995, instead of that bigger move, I would have looked for a sideways move. But in that day, you know, our high there was at 2078. So we really took it out with some confidence. And what we've done since then is the next day was unchanged to slightly higher. That's typical. And the last 2 days, it's a market trying to figure out what to do. Yesterday, the market broke to the downside. Well, if sellers are here, they should have had a close around $20. We didn't do that. We bounced right back up, and we had a close around 2056. So that big shadow on the bottom implies really kind of a neutral stance. What I was looking for today was an inside type day, primarily because of the price action. And that's really what we have so far. The day's not done, who knows? But I think it's a market now trying to search out what to do. Is the bias bullish? Yes. Do we see paper supporting it now or volume supporting it now? No. It's more neutral than it is positive. And the expectations are positive also for this market. It'll be interesting to see if they can be met. I'm really interested in hearing what you say about the options in this market. You know, the insights that you provide, Mark, are so essential in terms of getting an idea of what's out there. Where is that paper? And I really like that. And you do a good job with that. But show us where is that? Where do you see these options trading out here right now in silver?
Well, since you asked so nicely, Dan, I think we can make that happen out there today. Like I said, about 45,000 contracts on the tape already in silver, so a pretty active week. Hanging out at about a 2070 right now, up about 1 2/3 points, or about 8.7% just since Monday's show. So obviously a big banger week here for silver. And of that pretty active week, 37% going up in the D's contract. So we're going to hang out there. What is the vol right now in silver? It's a pretty juicy 34 in that D's contract, up about 2 points on the week. Skew-wise, last week the puts 1.2% cheap, so not that far away from flat. This week they've swung the other way, about 0.6 of a point bid, so a little bit of extra juice out there, but still pretty flat. The calls last week were 4.1% bid. This week they have come in a little more than half. They're down to about 1.8% bid, so not a huge call skew, but a little bit of a call skew out there for silver this week. And in terms of action, listeners, the big dog this week was the 16 even puts, doing about 2,000 contracts this week. The big day is today, 700 today, 700 on Monday as well. So they've been trading pretty actively all throughout the week, opening, closing. Looks like it could be a bit of a vertical going up, because 700 of the 16 puts and 760 of the 15 puts also went up today. So perhaps a bit of a vertical here. We saw about 1,600 of the 15 puts trading in December this week as well. It looks like they were pretty much 1-to-1 all week long, except for Monday. Monday, we saw 700 of the 16 puts going up and about 370 of the 15 puts, both opening on those. And then we saw Tuesday about 280 of each closing, 280 again on Wednesday, both closing, and then 700 odd today. So they've been trading in lockstep all week long. So someone is opening and closing this vertical, or doing a little bit of a roll here. Either way, it's interesting paper here. So the 16 to 15 puts in December lead in the dance. Then behind that, we also have some calls, 22 half calls. I said we're at about a 2070, so not as far out of the money as they used to be calls. Trading pretty actively. The big day was Wednesday for those, about 700 on Wednesday, and then 500 today. The rest scattered throughout the week, opening and closing back and forth on those 22 half calls. And then also saw action in the 18 even puts here in November. Those were actually, I take it back, those were the number one most active contract this week. Trading about 2,300 contracts, about 900 on Monday, about 900 on Tuesday, about 500 and change on Wednesday, not as many today. Opening earlier in the week, closing in the latter portions of the week. Intriguing stuff here. Also, the 19 puts doing about 1,500 contracts. Again, pretty much opening Monday and Tuesday and closing Wednesday, and not as much paper going up out here today. So it's mostly all earlier in the week for the put action here in silver. It is a metal, listener, so we'll have to look and see if we see any other interesting and or aberrant prints. If this was gold, I would say there'd be some funky put or call fly pretty far out to the distance. Not quite seeing that right now in silver. But then again, silver is kind of its own beast. But if you want some interesting upside activity, allow me to present the Jan 30s going up 850 times. All of that on Tuesday. All opening. So someone opening for size on the Jan 30s, listeners, nearly 1,000 times. So a 30 handle by January. What do you think? Intriguing stuff afoot. And we packed a lot of living into the show this week, but that music means we're already done, listeners. We've come up against it yet again. Man, Dan, time flies when we're talking futures options, sir.
Well, there's so many stories. I look at each one of these markets as a story to read. And it's multifaceted. There's all these pieces that come together. I was just thinking when you were going over silver, when we think about the indices, if we think about the S&P 500, just as a quick thought, that 45% of its income comes from outside this country. So when we think about that index, we want to really think about what's happening globally, because it does have an impact on those earnings and what we can expect out of that index. But yeah, it does fly by whenever we're together, Mark. I really enjoyed this.
That means we're having fun. Hopefully the listeners are having fun too. And Dan, if folks want to continue the party with you, they want to have more fun with you throughout the week, where should they go? What should they do?
Well, they could go to dangramza.com, There's a course there, and there's an advanced video that I look at 22 markets every day. But there's also a free video. And when you go to if you decide to go to the website, you just click on where it says start here, and you'll see a video of me over the Board of Trade trading floor talking about what you'll see in the videos. You click on the free video, you register, your information stays right there. I don't do anything with it. You won't hear from me unless you sign up for a free daily notice. It's an email. So when I produce the video and it gets uploaded, you get an email that says the video is available. I look at 22 markets on a daily basis. If the market's trading, I'm doing a video. So, and you can go back 7 years. What did he say when this happened? We'll go back to that date. You can see that. You'll also see red and green lines, which represent buy and sell levels. These are not buy and sell recommendations, but I wanted to share how I'm looking at these markets, and that's what that represents. So that, maybe if you've never looked at futures, a place to begin is just look at them. And here you'll hear my commentary as you do. See how they trade. See if they're crazy, or maybe they're not that bad. Or if you only trade stock indices, maybe crude oil may be something to look at. So that's the intent behind it.
There you go. Check him out. Dan Gramza, Gramza.com is the place to go. And you know where to go to check out these reports for yourselves. CMEgroup.com/TWIFO, TWIFO. Click on whatever product your heart desires, listeners. They're all there for you 24/7, 365. No rest for the TWIFO report. So check them out at your leisure. And of course, you know where to go to learn more about all things small caps. We want to dive deeper in some of this paper we talked about today on the old RUT options, or maybe you want to see what's driving all this action out there in the small cap index as well. FTSE Russell, FTSE Russell.com is the place to go to begin your journey into the world of small caps, listeners. Give them a follow on Twitter while you're at it, at FTSE Russell, all one. It's going to do it for us on TWIFO. It's going to do it for us on the network today as well. Thanks to joining us, for all of you out there on the on-demand and on the live side. Back again tomorrow, noon Central, 1 p.m. Eastern for volatility views. And then back after that for all you pro folks with options oddities, and then back again next week with all usual smorgasbord of content kicking off on Monday all the way through to next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit CMEgroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit FTSERussell.com, CBOE.com, and CMEgroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.